Hi, this is Jay Norris with Trading University. I just want to follow up on that shift that we highlighted yesterday in the euro. Here's that 4-hour chart again, and we talked about that 20-day pattern shift right here, and we said yesterday if you get a successive closes below it, you get a couple of closes below that line, that's going to shift the pattern. And in fact, you did. This big benchmark candle down was the first close. Then you got another close below that line. That's the 2300 candle on the 4-hour chart. You can see right here the 2300 candle. That 2300 candle closes at 3 a.m. Chicago time. So 3 a.m. in Chicago, we knew that we had a 20-day shift. As I said yesterday, the 20-day pattern is a pretty big pattern. Markets have a relatively short attention span, going 20 days back. That's going to be a good reflection of the underlying fundamentals, day-to-day fundamentals. So you get a 20-day shift, it's a big deal. Now we're going to show you how you take advantage of that as a day trader. We said this is important for day traders yesterday. I'm going to pop all the way down to a 3-minute chart. Okay, here's the 3-minute chart. And we said 3 a.m. Chicago time, we knew the pattern had shifted bearish, right? So here's 3 a.m. right here. Hopefully you can see my cursor. Now we're going to show you how you take advantage of that. We said you're going to sell rallies. Here's how we approach selling rallies. I'm going to use my retracement tool, and I'm going to mark the session high. The session high starts at 4 p.m. Chicago time. I'm going to go from 4 p.m. here, so that's my high, and I'm going to mark that low at 3 a.m., which happened to mark the low of the session also. Remember, we knew right here that the pattern had shifted. At that point, we're definitely interested in selling rallies, even on the higher time frames. For example, once that 20-day shifted, now there's no question which side we want to play, right? We had that 5 and 10-day down. That's enough for short-term traders, but once you get the 20-day shift, that's really going to take away your buy signal. So you're no longer looking to buy dips here. Now, I showed you I laid a sell zone on that chart. You can see I have Bollinger Bands on there. We thank John Bollinger for that. I have a custom Bollinger Band on there. I also have to thank my wife for that. My wife said, hey, these Bollinger Bands are great. Why don't you try them? Well, 2 years later, I finally listened to her, and they are pretty good. I customized it. But it's pretty good. It gives you good confirmation, the Bollinger Band. But this zone is what we're really interested in. The purple line is the 50%. The green line is a GAN 625. So that's what Gann used to call the top of the pipe. So if you get a 625 rally in a downtrend, that's a pretty good setup for you. So essentially you had a double top here. That wouldn't have been a bad way to go. You get short there, you can ride it down depending on how you manage that. You have relatively low risk on the trade. Maybe you want to come out of a portion of that. But here's a nice setup here because it gets all the way to the top of the pipe. You couldn't close above the pipe. So when you get that cross here, the moving average cross, and you can see there's a short-term trend line break in there too. When you get that short-term trend line break in a downtrend, that's a nice area to get short in. Okay, and you have everything going for you on that trade. I'll show you another example of how markets are fractal in nature, and you'll start to understand why my clients at Trading University always say, wow, that's an eye-opener. We get a lot of wows in class, and here I'll show you that was the fractal nature of markets here. Let me show it to you again. We took yesterday's high, I should say today's session high, which was on the Chicago Open close. That created that high to low, created that Gann line. Gann used to call that the pipe. So price got all the way up in the top of the pipe, gave you a nice sell signal in there. That's a nice area to work the short side from. Now I'm going to demonstrate the fractal nature of markets. Look at this retracement there. What do you think happened right there? I'll do that retracement again from that high right there to that low you made just coming into the U.S. session. Bam, look at, you couldn't close above the pipe. The market tipped lower. There's another sell signal. Open up, you could see it, and once that moving average cross or market changed direction or short-term trend line break, change of direction, moving average cross, you had everything going for that trade. So boom, you want to ride that down. Look, it was right at the middle of the Bollinger Band. Bollinger Band's pretty good. Bollinger Band can give you confidence. So all we're demonstrating is that yesterday we talked about the potential shift. Today we had that shift at 3 a.m. Chicago time. You would have come in today, and again, you would have been looking to sell in the zone there, that sell zone created by old Gann's pipe, the top of the pipe, which is based on the retracement between the 50% and 5/8. 4/8 and 5/8. Again, understood that was a pretty good area to sell in a downtrend, so you had an opportunity here and you had an opportunity here, so you got a couple of nice downstrokes. So we would look to continue to sell rallies in the euro. Yesterday we were looking to sell rallies based on the 5 and 10 day patterns being down. Now that you have the 5, 10, and 20 down, even intermediate term traders are looking to sell rallies in this market. Hey, thank you so much. My name is Jay Norris. I teach trading at Trading University. Have a great weekend, everybody. Happy New Year.